Bob, thank you very much for your time.
Pleasure.
Strong visitor numbers to Shanghai. You've got over 10 million now. How confident are you can maintain that momentum?
Well, over 11 million now, I'm pleased to say. That earlier this week we hit 11 million, so just before our first anniversary. That's quite an achievement. We're extremely confident that this will continue to grow for a few reasons. People are obviously enjoying the product. Word of mouth is very, very strong. We know from the people who visit that they just love it because they're spending more time here and they're telling their friends about it. And we also know that awareness of this park is tremendous. We expected that the majority of people would come from the Shanghai region, certainly in the first year of operation, before the rest of the country found out about it. In fact, it's about 50-50, about 50% from this region, 50% from the rest of China. That's an extraordinary achievement. It just means that not only are people aware, but they're hearing that's worth visiting. So that's all good. We also have a large piece of land, over 7 square kilometers, and we've developed approximately half of it. We've already begun expansion, and next year we'll open Toy Story Land, and there's plenty of other opportunity to continue to build this out. So after a year, I'm pleased to say that prospects are really strong for continued success, continued growth, and to continue to provide the people of China with a unique and authentically Disney, distinctly Chinese theme park experience.
And I know you're hoping to break even this year. Can you give us a sense of how the revenues are breaking down between ticket sales and merchandise, and what impact that may have, if any, on changes or tweaks to the business plan for Shanghai?
Well, we did say that we hope to break even. I can confirm that we will. We're now close enough to the end of, today is actually the end of the first full year of business, and this will break even. That's also an extraordinary achievement. I'm not sure that we've ever done that. We certainly haven't done it in the last 30 years for a new theme park, so that's quite extraordinary. But we don't break down from a revenue perspective, what we get from tickets versus food and beverage, merchandise, hotel. I can tell you that obviously attendance is higher than we expected it would be. We also have had extremely high occupancy for our hotels, higher than we expected, for instance. On the food and beverage and merchandise side, we've had some challenges there, but it's mostly learning what the people of China want to eat when they visit a Disney theme park, not what they want to eat in general and how they want to eat it. And so we're working through some of that, a small challenge, but one that we're taking head on, and that's not a big issue. And the merchandise, you don't really know beforehand what people will want to buy when they come in. Certain things are more popular than we expected they would be, other things a little less so, but just in general, this is a very, very healthy business, almost no matter how you look at it, and that's great after only a year of operation.
The Chinese consumer has remained relatively robust, and we're seeing retail sales up around 10%. I'm wondering what your views are on the health of the Chinese consumer going forward.
Well, we start with what is the product that we're creating and how unique is it to the marketplace. And this is the first Disney theme park on the mainland of China. And while it's not the first theme park, if you look at the whole space, the theme park and amusement park business across China, there is nothing like this, obviously because they don't have Disney IP. But no one has built anything at this scale. No one has built anything at this quality. And that means that we have a distinct competitive advantage. And because of that, while we believe this is still a robust marketplace, we sit in this marketplace alone, on a chair that is higher and probably on more firm ground than any other. And that means that after a year of operation with over 11 million people coming, that we've really only just begun to tap into the marketplace. And how high is up is an interesting question. It gives us certainly a lot of confidence in our ability to expand, and no concerns at all about the marketplace whatsoever. And I don't suggest that we are invulnerable when it comes to changes in the marketplace, but right now we don't see anything on the horizon that suggests that this will be challenged.
But beyond Shanghai, the park saw a fall off in the number of visitors in 2016, according to some measurements. I'm wondering, is that partly down to some of the peak pricing that you introduced in some of the parks, or are there other factors at play?
Well, we don't make much of that statistic because 2016 was a record year for us in terms of the bottom line and a record year in terms of our margins. So we're running a business that is bigger in terms of profitability and healthier in terms of our margins. We don't necessarily just measure attendance when it comes to success. We look at the quality of our guests. Of course, all guests are high in quality, but how much time they spend and how much they spend when they visit. And when they visit, we try to manage visitation carefully, because if you have too many people, then it spoils the experience for others. And we have to be careful about that. And that affects pricing, causes variable pricing, for instance. But we didn't make much of that statistic, and almost to the point where we don't really comment much on it. I just say, look at the bottom line, and we report that 4 times a year, and it's extremely healthy. Excuse me.
Yeah. On ESPN, we've seen a tick up in the number of subscribers in May and June, according to Nielsen, and part of that is down to the online offerings from the likes of Sling. Is it time, are we at the place now where we can call the bottom to the subscriber losses for the channel?
I can't even enjoy the first-year anniversary of Shanghai Disneyland for just a few minutes without having to talk about ESPN. We had seen erosion when it came to the expanded basic bundle, and we believe that we could mitigate some of that by launching on new digital platforms, many of them over-the-top platforms that are more user-friendly and more mobile-first or more mobile-friendly. And we're just seeing the beginnings of some nice growth in that area, but we're not saying really where this will end up, because frankly it's a little bit too soon to tell. Clearly, probably the biggest challenge the company faces is the media business and the impact of competition and new technology on essentially what would have been a very healthy business model, and we're very focused on that in terms of how we're managing those businesses, in terms of our investment and our strategy.
Is the plan to launch the new online platform for ESPN still on track for rollout this year?
We hope to launch an online platform direct to consumer by the end of the calendar year.
Switching back focus to China and your cooperation when it comes to movies, can you update us on how that cooperation is progressing, and can you give us any more details about what we might expect out of the pipeline?
Well, when you say cooperation, you're talking about
with Shanghai Media Group.
Oh, I see. No, we have some things in development. I'm not going to comment specifically about them. This has become a very healthy movie market for us, largely for the product that we make in the United States and other parts of the world and distribute worldwide. Just had a very successful opening of Pirates, for instance. And we look to China from a movie market perspective with enthusiasm, and it is an extremely important market for us, given the fact that, by the way, or as an evidence, we've done premieres here. For instance, Beauty and the Beast had a nice premiere here, and Pirates had a big one at the park. Important market.
Is there another Pirates in the pipeline? Are you going to make another Pirates film?
We haven't said whether we will or not. There isn't another one in development right now, though.
Switching focus to Washington, just briefly. Clearly, we know that you pulled out of the President's Advisory Council after that decision to pull out of the Paris Climate Change Accords. I'm just wondering how, as an executive, you assess what we're seeing in Washington and the potential read-through, if any, when it comes to your sector.
Well, I don't think there's anything really for me to comment on specifically. The Walt Disney Company is a global company, a global brand. It's vital to us that not only the environment in the United States remain healthy, whether it's economic or political in nature, regulatory in nature, and that we have the ability to compete successfully and to operate successfully on a global basis. There are so many factors that contribute to that, from taxation to trade. Healthy relationships with other countries from a trade perspective is extremely important to multinationals. The Walt Disney Company is a major exporter of product. Our movie business is a great example of that. And maintaining an open relationship with the countries of the world so that we can bring our movies around the world, support jobs in the United States in the process, is really important. The environment is important, as I think I expressed in the action that I took. If you're doing business in the world, I think it's important that the world remain healthy, and certainly protecting the environment and being mindful of the damage that can be done to the environment is something that companies, I believe, should accept as a responsibility. So there are many, many factors.
You touched on tax, and that's clearly part of the policy agenda. And it seems that agenda is being stalled just by all the controversies that are unfolding in Washington. Does it concern you that that agenda is being stalled and the impact that might have?
I don't think I'll say whether I'm concerned or not about something potentially being stalled. I'm just going to reiterate the fact that it's a priority for us as a company that pays a very high corporate tax rate that America get competitive with the rest of the world. And right now we're not.
And are you confident in terms of the horizon for the US economy?
What I see on the near horizon for the U.S. economy, I'm not looking, well, we look long term, but I don't have anything specific there, is a generally healthy economy. We know that unemployment is fairly low. Consumer confidence is decent enough. Interest in certainly our businesses is quite strong. Theme park business being one of them. Advertising marketplace not too bad. A lot more competition from new digital entrants, but advertising is okay. Generally, the American consumer is healthy enough and certainly interested in Disney, which is great.